From New York to our TV and radio audiences worldwide, welcome to Balance of Power. This is where the world of politics meets the world of business. I'm David Westin. To check on the markets this morning, we have Kaylee Lyons. And Kaylee, we're off to a solid rally after this Memorial Day weekend.
Yeah, a very healthy Tuesday rally, David. Whatever concerns may still exist in regard to U.S.-China tensions, China-Hong Kong tensions, all of that seems to be put on the back burner today. Really, the focus instead is on optimism about reopening economies and the fact that maybe things have bottomed out, starting to normalize with economic data here in the U.S., like new home sales and consumer comfort, better than expected. Still, the data is not good, but at least it isn't as bad as it was. That has the Dow higher by nearly 2.5%. The S&P 500 is through the 3,000 level. Once again, that's the first time since early March, and that risk on tone is confirmed when you look across asset classes. The 10-year yield up by about 4 basis points as investors aren't so interested in safe havens like treasuries, and the dollar is well weaker against all of its G10 peers. The dollar spot index down by about 0.75%, that likely giving a boost to equities as well. And within the equity market, the groups of stocks that are outperforming really confirm that the narrative is all about reopening, more economic optimism. The best performers in the S&P 500 are the likes of airline, travel stocks, the airline index and hotels index up about 10 and 7% respectively. And on the economic front, it is the more cyclical, growth sensitive sectors that are leading the pack. The financials up nearly 5% and industrials up 4% in today's session, David.
Yeah, which is the big change, it seems to me, Kaylee, because in the past it was all about tech and to some extent healthcare, things that were going to do well no matter what happens with the virus. And now we're starting to see stocks that really only do well if we really can get on top of the virus. Is that because we really do have hope that we're getting past it, not past it, we're getting past it, or is it just because they had gotten beaten down so badly? At some point it makes sense.
It's likely a little bit of both. I mean, the financials and energy, for example, are the worst performing sectors year to date, so there may be a little bit of buying coming into the market given how depressed those valuations are. But the fact that it is those cyclical growth sensitive stocks that are outperforming means investors may be a bit more convinced about the sustainability of this rally, about the efficacy of the measures that have been taking, the fact that potentially the economy has bottomed out and is going to start to recover, and that this wasn't just a bear market rally that we've seen, that maybe it's something a little bit more sustainable. So they're starting to come back in to some of those value cyclical stocks.
Okay, Kaylee, thank you so very much. That's Kaylee Lyons reporting on the markets. Well, the markets certainly seem to be looking past the China problems, maybe to the possibility of a vaccine even, as we got new news this morning about a Novavax, yet another contender. Welcome now Dr. Wilbur Chen. He is professor of medicine at the University of Maryland, where he works in the department specifically on vaccine development. Doctor, thank you so much for coming to us. Let's start with Novavax, because it's just up the road from you in Gaithersburg, Maryland, actually. As we get news of these new contenders going to the next phase of testing, how do we evaluate what the real likelihood is that one of these will make it?
Yeah, I think each of these contenders, as you say, have to be evaluated separately. I think that we're seeing all of these vaccines that are coming out of the gate. And so the latest one, of course, is the Novavax one, but we've heard about, a handful of other ones that have come earlier, and even one of them had started even in March. So, again, we're watching them all come out of the gate. They're all racing toward the finish line. I think at least I myself am cheering not just for one horse, but for all of the horses simultaneously. And I'm hoping that each one of them will be successful, because the more vaccines that we have successful, the better we are set up globally to be able to meet the need to vaccinate large populations.
Yeah, that makes good sense. Now, as I understand it, this is your area, not mine. There are at least a couple of very different types of vaccines. One is the more traditional one, where you actually have some of the disease itself in it. That's more like the polio vaccine. And then there are others that are more high-tech, more biotech. Do you have a sense of which one is more likely to be efficacious?
Well, not necessarily. Now, there are some, as you say, that are made with more traditional vaccine techniques, and then we have more advanced techniques. And so the really old-fashioned way, the way that we make, flu vaccines from decades of experience, is we take chicken eggs and we put the virus into the chicken egg, and then the virus can replicate actually in those chicken eggs, in the embryonated chicken eggs. And then we have large amounts of the virus, then we purify it, break it down, and it's a purified vaccine, but that's how we make large amounts of this vaccine directed against the virus. For the coronavirus, we're using new techniques. mRNA, DNA, basically the genomic components of that particular virus, we can express. We can kind of programmatically make that in the lab so that we don't have to use like a chicken egg or some other kind of species or something else to make the vaccine for us. In other instances, what we do is we take the known virus, like an adenovirus, which is a common cold virus, and put in the gene segments of the corona, and we make what's called a virus vector so that the virus itself, this normal common cold virus that really doesn't cause a lot of disease, is expressing the corona on it and basically results in a very nice vaccine. So there are a lot of different technologies that are being used, these advanced technologies. And again, a lot of them have shown early success in other types of vaccines, and so we're applying all of these principles to be able to address this pandemic now.
I mean, the question everyone asks, which is unfair, is when are we going to get a vaccine? When is it going to happen? But give us some sense, if you go back historically, have there been instances like this where we've had this many candidates develop this fast, or is this really different?
This is completely different. I think even if you think back to 2009 with the H1N1 pandemic, I was a PI of the NIH national trials. And, we thought that at that time, and this was just a little over 10 years ago, we were making vaccines as fast as possible. And so we recognized the emergence of the pandemic flu back in March and April of that year, and we were able to go through clinical trials very quickly in October and November and have the national vaccines available in November and December and January as they rolled out with increasing, manufacture quantities. So that, what I just described to you, is 6 months or more. We thought that was fast, but that's because we were basing it on, we knew how to make flu vaccines from year to year to year. We just basically took that existing manufacture technology and everything else, and we're able to make vaccines very quickly. Now we're talking about the present day coronavirus, a completely new virus. We don't have a vaccine already available on the shelf that we have learned a lot about it. And so we're taking other technologies and applying it. But again, we don't have the vast amount of experience. So for us to go from say March or even right now May, and to have clinical trials being done and people talking about possible licensure, which means that we have the definitive efficacy studies performed and the data there that allow us to have it licensed by late autumn or early winter, or maybe late winter. We don't know what it is, but if it's Q3, Q4, or Q1 of 2021, again, that's a very fast timeline, unheard of before for a completely new pathogen.
Does size give anybody an advantage here? Because it strikes me, as we hear about these candidates, some of them are coming from very big pharmaceutical firms, then others, like Novavax, for example, for some relatively small firms. When you're trying to develop a vaccine, does it matter how big you are, how much money you have, how many resources you have?
I think it does in the end, but what I'm seeing is this landscape of vaccines that are being developed where small companies are teaming with large companies. Academia is teaming with companies. These companies are also pooling together their resources and are being funded sometimes simultaneously by the NIH or BARDA or other kind of federal entities, or something like CEPI, which is a large international nonprofit organization. Again, people are coalescing around a lot of these pooled resources. So this has been very exciting.
Yeah, I should say, talk to us, let's anticipate success here, about the manufacturing process. How difficult is that? How long does that take to do that?
I'm sorry, David, I can't hear you. I think I'm getting some interference. Could you ask that question again?
There's some crosstalk. There's some crosstalk going on right now, Doctor. I apologize. If we could take care of that crosstalk in the control room, can you hear? That would be great. We can hear Kaylee Lyons' voice. Could we cut that out, please? Okay, I'll try it again, Doctor. I'll try to speak up. The question I was asking is the manufacturing step in the process. How difficult is that? How much money does that take? How long does it take once you do find a really good candidate?
That's very good. So, any one of these products, even if it's a large company that is making a product and it becomes successful and is licensed, means that they have 1, 2, 3 manufacturer facilities under their own wings. which I think, to me, makes it very clear that we have to have these collaborations with other facilities, other manufacturers that are able to make the vaccine, that same vaccine in their own facilities, so that we, again, have a multiplicity effect where, let's say, for example, some large pharma may have 3 facilities. If they team with another company that has 2 of their own, they've got now 5 facilities that can be cranking out vaccine at their maximum capacities cumulatively. And so I think it's a cumulative effect because we're going to hopefully have multiple vaccines coming online at the same time or around the same time, and multiple facilities at the same time to be able to, again, by this multiplicity effect, have vaccines available for the large global population.
And one final question here, Doctor, really. What do you hear about international rivalries? Because we've heard some talk about if China gets one, maybe they'll keep it to themselves. We had the president of France, Mr. Macron, upset with the French company because they might give it to the United States. Are people cooperating across borders, apart from governments? Are the pharmaceutical developers, are they cooperating across borders?
Well, I guess I can say as a scientist, we try to stay out of the politics of this, and a lot of what you're describing is, I think, more on the political level, but the scientific community has really been tremendous in coalescing around each and every one of these vaccines and trying to, advance each of these vaccines independently. And it's been such a great collaborative effort. So in other words, I've been working with other international folks who have been focused on the same themes, and we're working together trying to see if we can have what we call synergies, where we can basically have lessons learned from one product and translate it to another product. We're trying to, be smart in how we design these studies so that we can conduct them faster and evaluate the information as fast as possible so that we can have these vaccines advanced. So what I'm describing to you is I think that on the scientific level, the scientists are talking to each other, certainly. I don't know on the international levels beyond me, between governments or, other things that are happening that are certainly out of my range of expertise that, again, are being discussed on the global stage.
Well, we certainly do appreciate your area of expertise, Doctor. It's really great to have you with us. That's Dr. Wilbur Chen. He's at the School of Medicine at the University of Maryland, where he works on vaccine development. Coming up here, we're going to talk about Hong Kong, where there are some big protests planned tomorrow as the Legislative Council meets on a new piece of legislation. We'll talk about that next. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Westin. We go now to Karina Mitchell for Bloomberg First Word News. Karina?
Okay, David, thank you. A top health expert is warning against being too overconfident that we're over the worst part of the coronavirus pandemic. World Health Organization Executive Director Dr. Mike Ryan told reporters today we're still in the first wave and that there are many areas of the world where infections are still on the rise. He said those include South America and South Asia, in particular, India. But in China, there are fears there could be a second wave. The city of Wuhan says it tested nearly 7 million people in 12 days. Based on numbers released by the local health commission, 206 cases were reported. Wuhan's 76-day lockdown was lifted in April, but new cases were discovered this month. And meanwhile, for a 7th consecutive day, India has reported its biggest jump in coronavirus cases. The country's health ministry reported more than 145,000 new infections, an increase of more than 6,500 from the day before. Officials also reported more than 4,100 deaths. India's virus caseload has been climbing as pandemic lockdown restrictions have eased. And a British government minister has quit in protest over a controversy involving Prime Minister Boris Johnson's top advisor. Dominic Cummings has refused to resign over allegations he broke the government's virus lockdown rules. A junior minister for Scotland, Douglas Ross, says many voters in his district don't understand Cummings' actions, so he's decided to step down. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg. David.
Thank you so much, Karina. Well, in Hong Kong, protesters are calling for a massive demonstration tomorrow as the Legislative Council is about to meet on a new piece of legislation protecting the flag. For more on this, we turn now to Rosalind Matheson. She is Bloomberg International Government Executive Editor. Rosalind, thank you so much for being here. So, as I say, there are sort of two pieces of legislation. We tend to think about the security legislation coming out of Beijing, but there's also one pending in Hong Kong, as I understand it.
Well, that's right, and that's more related to the flag, obviously, in Hong Kong. But they're both really about the one central issue, which is how much and in what way China encroaches on what Hong Kong sees as essential freedoms, or people and companies, Hong Kong rather, see as essential freedoms that they thought were guaranteed with the handover of Hong Kong to China some years ago, and that they feel have been encroached upon. And that's the question of how far China will go to curtail a dissent, particularly that's happening in Hong Kong. So you're seeing those protests planned for tomorrow. You could see those getting quite rowdy, quite noisy, possibly quite violent. The question is just how much broad support is there still behind that group? Because you will see the hardcore activists out tomorrow, but is the rest of Hong Kong truly still behind them? So those protests could be quite disruptive, but they may not be that sizable for now because, of course, there are still restrictions on protests and the size of protests in Hong Kong. More than 8 people equates to a protest there at the moment. But what we really need to try and understand is just how deep is the well still of disappointment with China in Hong Kong more broadly. We saw protests originally last year, I remember, of almost 500,000 people. Are we at the point where we would start to see those number of people coming out again? Or are they simply worn down by a year of protests, by the coronavirus impact on Hong Kong, by an economy that's clearly in trouble and just worn down to the point that they decide that this is what it is?
Yeah, exactly, Rosalind, and that's why, to borrow a term from the markets, has Beijing basically priced this in? I mean, they must have known there would be protests. They must have known that the United States might impose sanctions, things like that. The fact that they're willing to go forward at the National People's Congress, does that indicate basically Beijing's taking a hard look at it? They may not like it, but they're willing to take the hit for the larger goal that they have?
Well, it seems to be the case that China is perceiving the moment here, and there's a number of factors that come into that. One is that there are legislative council elections in Hong Kong coming up in September, and there's a quite possibility that the majority in there would swing to opposition parliamentarians. So they clearly want to get this done before that. They want to also get it done while, of course, people are still restricted in movement in Hong Kong, and perhaps while the world's attention is very much focused on the coronavirus and the difficulties that each country is having with that. And many countries are grappling with questions around opening their economies, how to support their people in this moment, and that might be a good moment for China to choose to do this. They're obviously banking on the fact that international condemnation will be there, but the real hit to them from countries, including the US and elsewhere, might be limited. There won't be the appetite, perhaps, to hit them as hard as they could be affected in other times.
So Rosalind, finally, since the British gave Hong Kong back essentially to China, it's been one country, two systems. Some people think that may be gone now. Is that an overstatement? Are we still going to have one country and two systems, or is Beijing on the way to saying it's one country, period, full stop?
Well, China still at least pays lip service to the idea of one country, two systems, also because they need to be careful in other areas, including Macau, and they don't, of course, want to frighten away international business, including the banking sector, too quickly from Hong Kong. But one thing that's been interesting in recent years is China saying they don't need Hong Kong as much as they did maybe 10 years ago because they have a strong financial sector at home. Many international companies, including banks, can operate just over the border on mainland China. They've built up cities there that can designed to sort of promote the business of doing finance in China. The trade throughput that goes through Hong Kong now into China is minimal. So China has been saying for some time that we don't need Hong Kong as much as we used to and perhaps as you think we might. And therefore, it's less important to us to sort of perhaps maintain a pretense of one country, two systems anymore because we can cut Hong Kong out of the global financial system and it really doesn't matter that much. So that's very much their thinking. They will never at least say publicly that that the two systems philosophy remains. It's important for them to say that front-facing at least. But the reality to many people is that it's less of an issue more and more.
Okay, thank you so very much. That's our Bloomberg colleague, Rosalind Matheson, on Hong Kong. Coming up here next, we're going to talk about home building, which is on the rise today. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Westin. Stock of the hour now, and it is Toll Brothers, which is up more than 4%, the highest it's been since early March, on those encouraging numbers about new home starts this week. So we're going to turn now to Kaylee Lines for a full report. So Kaylee, we're building new homes.
Yeah, we are indeed, and we're actually selling them, which is the good news today. It has Toll Brothers higher for a third day in a row. Now, of course, part of the gain today has to do with that broad market rally, optimism about reopening, economic recovery, which is helpful to home builders. But the data was really just much stronger than was anticipated in April after that really big plunge we had seen in March. So home sales climbed 0.6% at an annualized pace of 623,000. That was well above the 480,000 that was expected by economists. You saw stronger sales in 3 out of 4 regions in the U.S. And really this just suggests that the housing market is starting to stabilize. It's likely aided by the fact that mortgage rates are back down near historic lows and the fact that home builders have actually held up pretty okay in this, and that they've gotten some aid from local governments and have been deemed as an essential industry, so they were able to keep building despite the slowdown. So that has not just Toll Brothers higher today because of the positive data, but the likes of KB Homes, Polt Group, D.R. Horton are all rallying between 4 and 5% today. But of course, this is really just an extension of the recent rally we have seen. Toll Brothers, since its low in mid-late March, David, is up nearly 120% and obviously climbing higher again today.
Wow, it's fascinating, though, Kaylee. It's new homes, it's not existing homes. So maybe people want bright, shiny new homes because maybe there's not as much coronavirus in them, perhaps. Who knows? But thank you so much to Kaylee Lines for that report on Toll Brothers and the housing industry. Coming up here, Memorial Day. That's the time when we see our presidential candidates. We saw them out yesterday. One of them had a mask, one of them didn't have a mask. There seems to be a bipartisan split now, even on the coronavirus and how you approach it, how you treat it. And we're going to be talking with our Bloomberg political contributor, Jeannie Zaino, next of Iona College. She's going to take us through where we are in the presidential race. This is Bloomberg. This is Balance of Power on Bloomberg Television and Radio. I'm David Westin. It's time now for First Word News, and for that we go to Karina Mitchell. Karina?
David, thank you. New York City has hired more than 1,700 so-called contact tracers. Mayor Bill de Blasio says they'll be trained and ready to get to work by June 1st. Health officials say tracers are key to stemming the spread of the virus by identifying who people infected have come into contact with. The city had originally planned to hire 1,000 tracers. Meanwhile, the Spanish government has declared 10 days of mourning starting Wednesday for the nearly 27,000 people who have died of the virus in Spain. Flags will be hoisted to half-staff in public buildings across the nation and on Spanish naval vessels until June 5th. The government says a memorial ceremony will be held once the country emerges from the lockdown. Spain has the 5th highest death toll in the world. And in Italy, most of the people who have died from the coronavirus were elderly and had other health conditions. The country's health institute is out with its latest report. It finds nearly 96% of those who died had other medical conditions. The average age of the victims was 80 years old. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg. David.
Thanks very much, Karina. Memorial Day is a day that we all gather to remember those who have sacrificed so much for the country. It's also a day when our presidential candidates are seen doing just that, even in a time of the coronavirus, and that's what we saw over the weekend. We welcome now our Bloomberg political contributor. She's Jeannie Zaino of Iona College. So Jeannie, it's always a treat to have you with us. It was striking to me, among other things, the images were different because you saw Vice President Biden with a mask on, with his wife with a mask on, and you saw President Trump with his First Lady with no mask on. And it really indicates to some extent the way there is a real division in the country, isn't there?
Absolutely. It was quite a split screen, as you mentioned, the issue of the masks. So, the Bidens wearing their masks and obviously President Trump and the First Lady not, and then the President later tweeting about that, sort of making fun of Joe Biden for retweeting, I should say. It was also interesting because it's really the first time in about 2 months we've seen Joe Biden out of his house and actually campaigning, which is absolutely astonishing if you remember that we're in a presidential election year. And despite the fact he hasn't been out campaigning actively, he is still beating the president in many of the polls. And so it was quite a split screen on this day, which traditionally suggests that we are really off to the races, usually in terms of the presidential election.
Yeah, and it's interesting as we look forward, and obviously the virus gets a vote in this at every turn, exactly what's going on, whether the cases are going down, going up. But it almost looks like there's almost a groundhog strategy on the part of Joe Biden to just say, stay at home, stay in his basement there. And he's, by the way, signaling that's what we should all be doing. And the president, on the other hand, cannot wait to get out. We went to Baltimore even though the mayor said, don't come.
Yeah, absolutely. And we should say against the advice of his own administration, his own government, and the CDC recommendations, being out and not wearing a mask. And also, it's an interesting political choice for him because, of course, about 65 to 75%, depending on which polls you look at, of the American public support the requirements that people who can't social distance wear a mask. And I think it's over 90% who report that they are wearing masks when they're out in public. So it really is a stark difference between what we're seeing the two do. And of course, Joe Biden, if the old adage, if your opponent, if you're winning the way you're winning, you don't have to do much else. And Joe Biden is clearly up in the polls, so his campaign feels quite comfortable keeping him in his house, and he's been campaigning, and it's been going pretty well for them, they think.
At the same time, you and I both saw this report at Bloomberg on states that voted for Donald Trump in 2016 as opposed to Hillary Clinton. And the proportion of number of people who have lost the job for every person infected, it's 23 people have lost a job for every one person infected in the Trump states, and it's 13 people for every one person infected in the blue states, which indicates that really politically it makes some sense, at least in his states that he won, for him to be saying, let's get back to work.
It does make sense politically, although, of course, there are real questions there. If there is a second wave of the virus that hits and people are put, if they go back to work and put out of work again, and how much more difficult it can be to pick up an economy at that point. But I do think we are going to see in the next few weeks, and Joe Biden signaled this in an interview on Friday, that we are going to see a real battle between these two campaigns on the state of the economy. President Trump clearly thinks that that is still his strongest message, and that the economy, by the time the election occurs, is going to be very, very strong. And Joe Biden feels he can make the case that the president not only mismanaged the virus, the pandemic, but in the process, he mismanaged the economy, and that's why we have unemployment at the rate it is. So it is, a little bit of a contentious strategy on Joe Biden's part because, of course, there is an argument to be made that this is the president's strongest suit, but they say that they are going to take it to the president on the economy in the coming weeks, and they think that's going to be a winning strategy, particularly since they want to make the case that Joe Biden was front and center in leading the country out of the economic crisis in 2008, and they think that he can argue he will do it again better than the president has.
And Jeannie, so often it depends on what the definitions are that you use. For the economy, for example, if you look at the stock market, it is looking pretty darn good right now, as the president tweeted just today about. On the other hand, if you look at unemployment, it is stunning, and it looks like it's just going up. If we've got 20% plus unemployment, that must be something that the president will have a tough time overcoming.
You're absolutely right, and I thought it was fascinating that, Jason Furman, a top economist for the Obama administration, came out and stunned many Democrats not that long ago by saying we're seeing the best economic data we've seen in history, and by the time we get to November, the numbers are going to be very, very good. And you had Larry Kudlow and others from the Trump administration absolutely agreeing with his assessment, in part, and he makes a much more complicated argument than I'm making, in part because this is a crisis that is not similar to the 2008 crisis in terms of the nature of it and the impact on the economy. And so I do think the president and his team are banking on the fact that he is going to lead this economy back to where they want to see it coming, and the the Biden campaign is going to try to make the case that even if we start to see unemployment and other, challenging numbers go down, that it is not enough, and that if he hadn't mismanaged this thing from the beginning, we would be in better shape. But I think it is a bit of a controversial choice for the Bidens to take on the economy, which again remains the president's strongest suit, and I'm not sure people are going to change their minds on that.
At the same time, the president is taking on some controversial issues as well. He's now threatening to pull his Republican convention out of North Carolina if they don't let him gather thousands of people together. And of course, there's a battle in various fronts about mail-in ballots, where they're basically saying you got to show up to the balloting place. That could be controversial in and of itself, couldn't it?
Yeah, absolutely. The president tweeted that he wants full attendance in a fully occupied convention in Charlotte in late August. And of course, we have a governor from North Carolina who's a Democrat. We have a mayor of Charlotte who is a Democrat. The governor's in a very close re-election bid. And so, I do think the president is going to keep the heat on this. There was some thinking that he might want to move this to Florida, move it to his own resort, and he said that's not the case. But I do think he feels like keeping the pressure on this Democratic governor in this difficult time is something that's going to give him some leverage in making this case, because he's putting the governor in a difficult position. If they go forward and people get ill after, that's not going to help the governor. If the governor says no and they rob Charlotte and they rob North Carolina of all the money that the convention brings in, that's going to be a problem for him as well. So I do think the president feels like he's, winning on this score. I think we're going to see him keep this up. I think in the end, the GOP won't be able to back out of this given the contracts that are there. But to your earlier point, this really is something that really is a stark contrast to the Democrats, who seem, who have signaled they are very open to having a, some kind of internet, some kind of, social distance convention, if you will. They haven't quite defined it yet, but they are much more open than the president seems to be to moving away from the traditional in-person 50,000 people descending on the city for 4 days. And, on the mail-in ballots, we've seen the Republicans take on the California on this issue. I think they are fighting an uphill battle. Mail-in ballots have been led by Republicans in the West for many years. They've been incredibly successful, and I think we're going to see more of those. But I do think it signals that however this election turns out, the president and his team are likely to make the case, if they don't win, that they were robbed, and they will, signaling they may not want to accept those results.
Well, I hope that's not the case. Thank you so much, Jeannie. Really great to have you with us. As always, that's Jeannie Zaino. She is our Bloomberg political contributor, and she is, of course, a professor of political science at Iona College. Coming up here, Jamie Dimon, the CEO of JPMorgan Chase, is speaking right now at a Deutsche Bank event. We're going to bring you some of that live. That's coming up next on Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Westin. Congress is considering whether more stimulus is needed for the economy, and in particular, whether more needs to be done for the growing list of unemployed. Earlier today, former Federal Reserve Governor Dan Tarullo spoke with Bloomberg Surveillance on just this subject.
I don't know what the public reaction will be, but I think as a macroeconomic matter and certainly just as a human matter, taking measures now to ensure that there is income support for the millions and millions of people who are going to remain unemployed for quite some time to come ought to be the country's highest priority right now. And I'm a bit concerned that people are, or more than a bit concerned, that so many people are taking what they see as a wait-and-see attitude. I mean, look, as you just said, unemployment is likely to be reported in the vicinity of 20%. Remember, 11 years ago, during the great financial crisis, we were scrambling to try to do something a lot about 10% unemployment. So even if you postulate a halving of what the current rate probably is, we'd still be in a very serious position relative to the post-war economy. So I think this notion of delaying and seeing whether we need to do more is really quite a bad mistake.
Well, Dan, you touched on the other flaw as well. It's not just about the timing, it's the composition of the next response. You're talking about a demand-side effort. The administration increasingly, whenever I listen to them, whenever I get the chance to speak to them, are talking about a supply-side response to help this economy reopen and get people back to work. What are the limitations of that, Dan?
Well, I think, Jonathan, we all recognize that this problem has been driven by epidemiology. It hasn't been driven by in the Fed stepping on the brakes too hard. It hasn't been driven by excessive credit, although that's probably exacerbated things. It's been driven by the epidemiology. And so getting people back to work is dependent upon the medical developments, not strictly speaking economic developments. We can provide income support, but we cannot just through economic measures make it safe for people to go out. We can't make people comfortable about going out. And I think what that means is we've got an enormous amount of uncertainty that's probably going to be with us for some time. I mean, you folks on Bloomberg have been reporting on the enormous volatility in markets over the last couple of months. We got some good news on the medical front, and everything goes up. You get some bad news, everything goes down. I think that just reflects the fact that we just don't know, and we ought to prepare for the possibility that things are going to be quite difficult for quite some time to come.
Dan, and to this point, this sort of volatility that we saw in markets has basically gone away to a certain degree, in part due to what the Federal Reserve has done in terms of monetizing the debt of the United States. What's the risk for financial stability going forward, given how much debt the U.S. is incurring, given how much the Fed is interfering and pushing investors further into risk?
Well, I think we do need to acknowledge that there are going to be some risks in whenever one takes the range of fiscal and monetary measures that have been taken. But I think we need to quickly qualify that observation by saying it is absolutely necessary to do whatever we can to stop what is a very serious situation from being a chronic, highly depressed situation. In other words, we're going to have to take some risks with respect to debt levels, with respect to financial stability, in order to stop this thing from getting worse and staying at a low level.
To break? That was former Fed Governor Dan Tarullo, now at Harvard. Coming up next, we're going to hear from Eugene Scalia. He's the Secretary of the Department of Labor, about what he thinks about the growing unemployment numbers. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Westin. JP Morgan Chase CEO Jamie Dimon is speaking right now virtually at a Deutsche Bank Financial Services Summit, and we're going to dip in on that right now.
Their own assumptions. So, it's going to be up to the analyst to kind of dig into the 10Qs and ask the question about what's your assumption. Some people are assuming a very strong recovery. Some are assuming something different. Some use probabilities of different scenarios. Some use some are expecting home price to go way down, some are expecting them to go up. So you got to dig into CECL to figure out what the hell they put up. This is one of the reasons I always thought CECL was a bad idea. I think people are going to spend more time playing around with the assumptions than looking at the actual underlying data.
So I did want to ask on dividends. A few weeks back, there was a lot of concern, certainly question about the banks being able to continue to pay the dividends. I mean, frankly, for JP Morgan and many banks, it's really hard for the math to show the need to cut the dividends. Yeah. But I guess the question is, one, want to make sure you still agree. But then two, under what circumstance may bank dividends be cut or suspended? I would imagine it might not just be financial in nature, if you could address that.
Yeah. So I think it's important that a company try to sustain its dividend. I do think there were legitimate complaints in the great financial recession that a lot of banks in particular and other companies, but banks in particular, continue to pay very outsized dividends going into a crisis, and they depleted too much of their capital by doing that. Remember, this time around, the real capital being used to buy back stock, and all the banks stopped that. And people are a little misguided when they talk about dividends. It's a drop in the bucket. So we just announced our dividend for this quarter. It's less than $3 billion, like 0.15% of our capital base. If you take the base case, what I was just talking about, the kind of the base assumption that economists have out there, we will earn quite a bit of money this year. Obviously, it'll be down a lot, but that's a lot of money. Why do you cut your dividend and then you just have to increase it right away? to meet that obligation of shareholders. And of course, you don't really need it either because you still have a lot of excess capital. So the better course of action was to wait, and to see. And if the recovery starts, and like I said, I think we'll have a pretty good idea when we report earnings, then you will never have needed to cut your dividend. If by any chance that is pretty clear that this is going to get worse dramatically, then of course the board will take up the issue and say, what should we do? When should we do it? How should we do it? If a board is mature, they'll consider that. But you have to have a pretty bad economic environment, I think, for banks to justify their boards and their shows that we should cut it now. It is cheap capital if you have something like a great financial crisis that goes on for 3 years. It's cheaper to do that than to try to raise capital in the marketplace. So, but again, you got to look at the numbers. These banks, most of them are really well capitalized.
And conversely, if things keep moving the right direction, it's not going to be long before investors and analysts start asking about resumption of buybacks. Obviously, the entire industry of big banks, preemptively chose to suspend buybacks to support clients, to support customers, to support the economy. What are your thoughts on resumption of buybacks?
I think you're a little premature. I think you got to see the white of the eyes of the recovery before you start something like buybacks. But I think that companies and it'll be more opportunistic. If companies all of a sudden are retaining a lot of capital, they're earning money, reserves are coming down, et cetera. Yeah, I think you may see people start them, but they probably won't be the size that you saw before.
And just longer term buyback.
Excuse me?
No, go ahead, please.
I think and the other notion that people have about buyback, something bad about, buying back your stock. And I've always thought that you're showing buy back your stock when you think you're buying at a price that your remaining shareholders are getting a good deal. I've never believed this notion that you buy that it's returning cash to shareholders, therefore it doesn't matter what price you pay, which is so there's this attitude that people overpaid. Obviously, that's true sometimes. It's a free world. People are going to overpay. On the other hand, it's a normal recirculation of capital that you can't use, and you give it back to your shareholders. This notion that it disappears is dead wrong. You're just recirculating it to somebody else to a higher and best use. And obviously, banks should retain the capital they use to safely run their business. But once they've done that, there's no reason they shouldn't be buying back stock if they think that's the best use of their capital.
And do you think looking to the other side of this, as banks, including JP Morgan, thinking about allocating their excess capital, will be done differently? You've floated the idea of supplemental dividends over buybacks, given some of the price. So do you think that could gain some momentum? Again, looking at that.
No, I don't, and that's the worst. To me, that's the worst way to handle excess capital. So there's nothing, to me, the way we look at excess capital, there's nothing wrong with holding excess capital for a while because you can tell your shareholder, hey, this is excess capital. I hope to deploy it for you at a good return one day, soon, in the next year or two. If I can't use it, I do want to give it back to you. I'd rather just raise the dividend and, slowly suck down the excess capital than do a special. The reason that people are considering special dividends and stuff is because the way the regulatory system is working, you were heavily penalized by having dividends. And so, you couldn't raise your dividend, too much or something like that because it would penalize you under a bunch of tests that they have or something. So I'd rather that you, as long as you're meeting your regulatory requirements, you get to decide your dividend. And you don't have to worry about that. And you don't, special, obviously you can do one day. I think it's not the preferred way to do something.
That's a good segue into longer-term impacts from the current crisis. I mean, the first thing that comes to mind is where we just left off on regulation. And, banks were obviously at the center of a dramatic increase in regulation last cycle. Hopefully it'll be different this time. But talk about how you think regulation may be different from this crisis, both for banks and maybe broadly speaking for corporate America.
Yeah. So look, I've always acknowledged that there was you always want good regulations. Some people read that as being more. I mean, more isn't always good. More can actually be worse, have adverse consequences. And obviously, after the crisis, there was a need for regulatory reform. Some of these institutions, not banks so much as investment banks, massively over-leveraged. A lot of the shadow banks, massively over-leveraged. Accounting allowed people to have these huge off-balance sheet things just simply not accounted for, and they were all over-leveraged and mismatched in terms of maturity, with their liabilities and assets and stuff like that. So reform was a good thing. Transparency, more liquidity, more capital, more stress testing for those who didn't do it Some of us already did it, but those are very good things. But of course, you can look at a bunch of other things. I think, and I don't want to be complaining about regulations. They are what they are. We'll deal with them the way they are. But it does make sense at one point to look at, were they calibrated right? Were they coordinated right? Do they have adverse consequences? And I won't go through it here, but there are a lot of things which are having adverse consequences today, on swap rates, on repo rates, on the movement of money, where the risk is ending up in the system. Like the papers are writing about mortgages today, like we have this problem with mortgages. No. We've been listening to Jamie Dimon. He is the chairman and CEO of J.P. Morgan Chase, speaking at a Deutsche Bank Financial Services event virtually, as we all are doing these days. Coming up in our second hour, Balance of Power on radio, we're going to talk with Jim Renacci, former congressman, Republican congressman from Ohio, about reopening the Ohio economy. And this is Bloomberg.